All right. It looks like we have a lot of penny stocks moving. All right, so we'll take a look at the scans here. We got YTEN. YTEN. USDA determines that yield 10 biosciences omega-3 camelina varieties may be planted and bred in the U.S. I'm not sure what camelina is. Bioscience omega-3. Ramp up commercial sale progress of omega-3 fatty acids. Okay. Trading higher at the company announced that U.S. regulatory should determine the varieties may be planted and bred. So I guess that's good news. Market seems to be reacting well. Went from 25 cents up to 65 right now. Daily chart. Looks like we've broken out of this range here. And kind of reclaiming a little bit of this gap. So we do have room. We do have room on this. Maybe hopefully up to like $1, a break of $1. Potential. So we'll see if this one holds up and continues up to $1. Could be a potential for $1. ASST is another stock that was moving. Y10, let's take a look again at the dilution tracker. I just want to verify the float. Looks like 11 million share float. Looks like already priced in an offering. So looks like that's fine. Don't have any warrants until there's warrants at 65 cents. 8 million. Or sorry, 5.7 million. ASST is the next one that we wanted to take a look at. ASST. Asset Entities enters into agreement with ZenDrop, the #1 high-margin drop shipping app. Okay, agreements are pretty good. I've never heard of ZenDrop, so that's usually a partnership with a bigger company or a well-known company is definitely a very good catalyst. With a smaller company that nobody really knows about, maybe not. But market seems to react decently to it. It's up about 30 cents, which is 66%. So it does have a catalyst. KAVL. I did try to trade this, by the way, going for this breakout, getting in at like 46, 47, looking for the breakthrough 50, and then selling for a small loss for the rejection. That was my trade on KAVL. This one has a sub 1 million share float. Sub 1 million share float, 800,000 to be exact. What's up? Good morning, guys. Good morning. Hopefully everyone had a great morning and great evening last night. Everyone is refreshed for the next day. But yes, KAVL has a sub 1 million share float, which is good. Let's see the news on it, if it does have news. I don't see news. Don't see news. Yeah. Yeah, I don't see news, but it doesn't mean that this can't still make a move. You know, we've seen moves occur even without a catalyst. So, you know, this could still be potential, especially if it's a negative, or sorry, a sub 1 million share float. We got a couple questions coming in here. If stock fails to hold the highs, it means there are short sellers at the top. How much does it cost to watch your live trades? Also, do you mute? So yeah, if a stock fails to hold the highs, that's usually, you know, where shorts start their position for a fade, and then maybe adding for a break of support to the downside. So it is never really, you never really know for sure if the sellers are short sellers or if they are sellers of long positions. So you never really know for sure unless you're like a market maker or see the orders coming in, whether if it's a cover order or if it's a, I guess it wouldn't even, I don't even know if it would segment from, you know, a cover versus a buy. I think they're just the same. So there's never really a way to know for sure. Some signs could be, you know, high volume pin bars at the top, or it could be topping tail, high volume topping tail at the high after a nice breakout, or even if it's a double top. You know, that could be a sign of short sellers piling in, but you never really know for sure if it's longs, you know, selling their position, or if it's shorts getting in. But, you know, shorts do look for the entry at resistance, which would be usually high of day or anticipating a false breakout. And, you know, knowing that knowledge, you know, you can use that for, you know, yourself as well. You can get in and anticipate, you know, if it does come back to test that level, that shorts could potentially be covering into your buying, which can fuel, you know, the next leg in the move. But yeah, you can't really know for sure because you can't see the order. You can't see, you know, if it's a cover or if it's a seller from a long position, or if it's a short versus a selling from a long position. How much does it cost to be watch live trades? So for the live trading archive, using the code Triad at MMU, it's $199 for the year. So you get access for the entire year, 12 months for $199 after using code Triad. And you guys can see the archive for every single day that I trade. Every single day, I record my screen and post it there. The link will be down in the description for that if you want to get more details on that. What's up, bro? What's up, HHXYZ? SPRC or KAVL today? Yeah, KAVL has potential. I do like it's a, you know, sub 1 million share float. It doesn't have a news catalyst, but, you know, I think it definitely could be decent. We have Curry. I don't think I've ever had Curry before, but, you know, maybe today I'll try some Curry. Does look like the volume is pretty low, but we'll see. We'll see about Curry. I don't know if I'm going to be trying some Curry today. AMTX. This one, I don't know. Low volume. This is getting down deeper in the scans. You're saying SPRC? Oof. I don't like SPRC. We failed to hold any sort of highs here, and it's low volume. I definitely like KAVL more than that. So KAVL, I'm going to be watching KAVL. I'm going to be watching ASST and YTEN. So YTEN is the one that's breaking highs, which is good to see. ASST is fading a little bit on low volume. I think we're still holding VWAP though. No, we're under VWAP. So I guess if we can get over, I'll put an alert here if we can get back over 92, back over this pivot. So this would be a resistance point for, now it's considered backside. For me to consider this back to being potentially, a front side, I would want to see a break back over 92, 93. And then, in this area for the break of the highs. But, if it's holding this downward trend, it's still going to be considered backside, for me at least. But there's a little bit of a wedge forming here. So maybe we break to the upside, or maybe we break to the downside. You never really know. Never really know. In trading, it's not an exact science. It's not an exact science, which is why it's so tough. It's why it's so challenging, because it's not 2 + 2 = 4. And everyone's so used to going through school and everything's being an exact. Everything is a fact. 2 + 2 = 4. Johnny sold 8 apples and ate 3, and he only has 5 left. Trading is not like that. Trading is not like that. It's very, very subjective. It's very psychological. It's very, situational. It's not a science. It's not an exact science. It's not exact math. And that's why it's so tough to maintain consistency. Because a month ago, I was green, massive green every day. I was super confident in myself, super confident in the setups. I knew exactly where to buy, I knew exactly where to sell. Now, if you ask me that, it's like, holy crap, I don't trust these setups. The same setups that were showing up in February, you giving the same setups right now, I can't trust it to the level of conviction that I had last month. And that's because the market changes. It's not exact. It's not an exact science. A bull flag in February would rip another 50%, another 100%. A bull flag here, you could double top. A lot of times we're seeing a double top and then a dump. So yeah, that's just the reality of trading, and that's why it's so difficult. But it's also, very, very lucrative and very rewarding, which is why we are here. And definitely the juice is worth the squeeze. The juice is definitely worth the squeeze. How did the market change so much in 1 month? Well, that's just this market cycles in small caps are a lot more frequent than the market cycles in the overall market and large caps. So market cycles in small caps can change every couple weeks. And that just has to do with volume. It has to do with the quality of catalysts that can make a move. It has to do with even, I guess, the overall market does have an effect on it when we do see the IWM making good moves, which is the small cap index. Yesterday, we ripped, but I guess it hasn't really made. Sometimes it does, sometimes it doesn't. It's really, I would say, for the most part, the overall market doesn't have an effect on small caps, for the most part. But obviously, you see something like COVID-19 where the market dumps, and then we're coming off the lows with massive volume, all the stimulus money. Of course, that's going to affect small caps, and that's why we saw these massive moves. But now it's kind of more so sideways with the markets and not really affecting small caps too much. But yeah, small caps is the momentum is always changing. The themes are always changing a lot faster than the overall market and the large caps. It's just how it is. just how it is. But you'll definitely be able to pick up on signs and signals of, you know, when it is changing, when it is changing, and how it's changing. A really good sign is just looking at your pre-market scan. You know, is the pre-market scan thick, and there's lots of good stocks that are up a couple 100% with a decent catalyst, and they're holding highs and ripping higher. You know, that's definitely a good sign that there's momentum in the market. You know, right now Y10, we're up pretty decent. I mean, it's up 180%. Is 50% plus not considered good? Yeah, so I mean, for me, anything over 40, 50%, the stock is in play as long as it has a low float. I guess give or take a catalyst. It doesn't need to have a catalyst, but I do prefer a catalyst. But I do look for at least 40 to 50%. But usually in a hot market, you'll see stocks going 500%, 300%, 1,000%, and that's what we were seeing in February. We were waking up with 1,000% gainers. And that's a sign of a hotter market. Right now, we're waking up with 180% gapper, which is decent, which is great. But I still don't think it's like a hot market that we had in February, even though we have 180% gapper. So that's just my thoughts. But yeah, anything over 40 or 50%, I like to at least take a look at, or it's at least on my scanner, and I at least have it on the side chart. Cannabis stocks are doing good lately. Yeah, what we got, ACB, Tilray. Yeah, a decent bounce off the lows. So Y10, maybe you get that move up to $1. KAVL on the daily chart has very heavy backside, very bad, you know, lots of resistance overhead. We could potentially see a move. We could potentially see a squeeze. But there's definitely a lot of overhead resistance, so I'm not sure how high it could go. I mean, we're already seeing resistance here at 250. 250. I can probably delete this one here. These are, I must have traded this before. I think I remember trading this before. Probably gonna have some resistance here around 330. There's just a lot of resistance on this thing. Then we're probably gonna have resistance at, you know, 475. That's if we even get there. You know, maybe we see a break of 3. I'd be surprised if this breaks the highs, to be honest with you. I'd be surprised. Large gappers give shorts a reason to get in. Absolutely. They need some juice for the squeeze. 20-30% gaps aren't much room to the downside. Yeah, absolutely. You're right. And that's why we see when sometimes when a stock rips so much in pre-market, when a stock rips like, say, 300, 400, 500% pre-market, at the open, it just completely dumps. And that's because it can't hold the highs, because there's not enough willing buyers to buy a stock that's up 50% or 500% in just a few hours. But shorts will be more than happy. We'll be more than happy to sell short and look for a fade because it's up 500%. So, you know, the market or the stock psychology, or the psychology of the market participants in that stock, shifts from being bullish to bearish at the open after a stock rips so much. But then again, let's say, you know, you get that 500% move, the chances of it going up another 100% are a lot higher than a stock going, you know, up from 50%, only up 50% at the open and then ripping another 100%. So you also can get, a lot of short squeezes as well. If you do see that selling at the open and we hold an area of support and we fail to fade further, that's when you get shorts to get on the wrong side of the move and they're covering into the high. And that's when you see a 500% gap turning to another 200-300% move at the open, or at 10 a.m., 10:30, because shorts have just got way too aggressive, and now their liquidity for the next leg up. And you're more likely to get that on a move that has a catalyst that's already shown great momentum earlier in the day, rather than a stock that's kind of just gapping up 40% on like some decent volume, doesn't really have a great catalyst. Something like KAVL, Is it easy to be a short seller or a long bias? It depends. It depends. A lot of people say that it's easier to be a short because you kind of just let the stock do its thing and then you get in for the fade lower, kind of anticipating it's going to go lower because it's a crap company. A lot of people say that's easier. On the one hand, yes, but on the other hand, the potential for risk is a lot higher, because if you're going short, you can essentially risk more than the amount of money in the trade. You can even lose more money in your account because you're essentially borrowing shares to buy back at a later price, and the later price could, as far as can go infinite. So you can go infinite. You have an infinite amount of risk going short, which is the downside of being a short. But yeah, a lot of people find it easier to short small caps because these companies are crap, and a lot of the times they come right back down faster than they go up. The only thing is, thinking how high is it going to go? How high is it going to go? For me, it's definitely harder to anticipate that it's going to move higher because it is a crap company. But the pro side is that no matter what happens, I can only lose the amount of money I put in the stock. So, and you can essentially manage your risk a lot more effectively going long than going short. And that's why, short selling these small caps, those small cap short traders, they'll have a streak of just really consistent green, and then one day loses like 5 green days on one trade or one day. And that's because of that risk profile that you're taking going short. But anyways, we have 1 minute left until the market open. Hopefully you guys get green today. Hit that thumbs up button for me. Also, if you're new, hit that subscribe button. Day trading is risky. I just want to remind you that. And following my videos will not guarantee you success or any results or profitability. Also, be wary of scammers and impersonators that will never ask for money or personal information. So hopefully you guys can get green today. Good luck, and I'll catch you guys later